Good afternoon and welcome to another weekly review of Indian equity markets. Predominantly, as you would have seen, we broadly tend to look at the core part of the market, which is Nifty and Bank Nifty, under a close lens as to what has happened over the week. Uh, and then rest of the indices, which are sub parts of the market, is something that uh, gives us the sense of what exactly has happened. So let's start with the review. And before I get going, I'm not making this video for any consumption or calls that needs to be taken basis this video. I'm making this video for my own study and consumption because I go through multiple thoughts, and this is a review of those thoughts over the course of the week. And I'm not a SEBI registered advisor, so everything that I say out here is something which is purely my own thought, my own take, and it is for my personal consumption. If you come across this video on YouTube channel, which is where I host this, happy to go through it. You can always comment, but I'm not here to kind of ask you to look at this as a education or training or anything else for that matter. So thank you, and let's get started with the review. So Nifty this week has printed a decent candle, especially considering the fact that over last 6 weeks we were seeing downward pressure being exerted by the bears, and bulls were completely out of whack, and had a fair bit of pain arising to them, especially the way last week we saw sell off with a long wick out here. The this candle is fairly a positive surprise, or some bit of happiness gets printed along with this candle. Also, this candle has got printed at a very crucial stage, crucial level, which is, if you were to look at this spot, right? So 19,200, 250, which is where market has been kind of hovering for some time now. This is a gap area. This is, and gaps are considered to be solid support or resistance zone, so per se. So right now this zone seems to be acting as a solid support, or support of some sort for the time being. This week's candle is fairly decent, though we have a long wick to counter, which essentially will put us in a much better shape than where we are today. But nevertheless, it's a positive candle, so we'll take it. We'll not shy away from calling it a positive candle. Obviously, the levels are something that has to be marked out clearly. At this point of time, if you're a short-term trader, I would suggest, and what I'm trying to do is essentially not trying to take any trades right here, because uh, while market seems to be in positive territory, but when you do some deep dive into the market, especially the underlying parts of the market, your bank nifty still remains a area of concern, which is what predominantly drives most of the other sectors and sentiment per se. I think that's still not out of woods. Number one. Number two is, let's get into daily time frame and let's look at this chart uh, in in right perspective. So if you see, after printing this wide range positive candle and creating an all time high, right, on July 20th, we are what we are seeing is, on a daily basis there is a lower high lower low, well established lower high lower low at this point of time, and we are yet to make any effort to take out any such higher high kind of structure at this point of time. And if I were to draw a trend line, this is this is how it looks like. So we have a very well established clear downward trending market on daily candle. Look at the way it is printing: lower high, lower low, other lower high, another low, another lower high, and another lower low. So we are definitely not out of woods. Now let's add another important aspect to this entire equation, which is when we put daily moving averages. Now you can clearly see that Nifty has spent 6 trading sessions below 50-day moving average, and now there's a wide range candle which is stopped right at 50-day moving average. It is definitely not a negative candle per se, but we are still below 50-day moving average. We need to take out 50-day moving average, show some sense of consolidation around these levels, and then possibly if we take out, or if we take off from here, is would be much more positive. So when would Nifty become interesting place, or what should an investor look at, or a trader should look at, is essentially, if you see, this was the consolidation zone, which is where we are consolidating. This was a breakout area. We have taken support here and consolidating here. One attempt to break out of this consolidation zone failed really badly. So clearly downward pressure is more, and this is the first positive candle which has got printed after many days of negative pressure on the Nifty. So there's no need to hurry and rush into trade, and which is exactly what we've been talking about for last 2 weeks. Uh, and even today, we are not completely out of woods. So if I were you, and if I were to initiate trade, I would wait for market to kind of settle down. And if you see on a daily basis, even the market is opening positively on a good day, and you feel like it's a great way to possibly market has bottomed out and maybe it's ready to make another dash up. But by the end of the day, we are giving back most of the gains, which is what you see almost every day. There's some element of tail here, but these are not decisive candles. This was a bounce from 50-day moving average, which is considered to be positive, but then we gave up 50-day moving average pretty easily. And this is the second attempt to try and take out 50-day moving average. If we are successful somewhere here, is when we should get into building index position, or else I would completely avoid building any index position for the time being. Let the market stabilize, settle down, and show what it wants to do. If when we move from daily to hourly time frame, things become a lot more easy and clearer out here. So as we are talking about lower high, lower low, you can see clearly established lower high, lower low. This is a range which is forming at this point of time. A break above this range with a solid wide range candle can be an opportunity to add some long position and try and see if it can build on from there. But then you also have to be cognizant that you will have to keep a slightly tight stop loss. You want to, ideally you should be willing to give up almost 300-350 points. But do you want to give out so much? uh, if you want to do that, then you should probably reduce your position size for the time being and build from here, and then slowly but surely start adding to the position. That's what I would do if I were to start trading in Nifty. And that's my take on Nifty for the time being. I won't rush to trade unless I see a nice candle closing sometime somewhere here in this week or maybe coming week. I would be happy if Nifty takes some more time, consolidates, and then tries to break out rather than trying to break out right away. So that's broadly what is happening in Nifty. Now let's look at Bank Nifty, which is another important aspect of the market. Let's come to weekly time frame. So on weekly time frame, Bank Nifty has not done much. It's an indecisive candle. Uh, volumes volumes are higher, are definitely higher. Uh, Nifty closed the week at 0.5% approximately, or 0.46. But we have fair bit of resistance to deal with. So let's not try and rush into any trades in Bank Nifty as well, which is again something that we were talking about for last couple of weeks. This is the consolidation zone, which is where we are trying to form some calendars. See what was happening in Bank Nifty couple of weeks back. We were trying to bounce off, we were again pushed back. This candle tried to take out, closed red candle, then we formed a couple of tails, and then finally we took out. But again we saw a sell off, right? But there was some sense of some points which were made out here. So I think once again what one should do is possibly wait for some bit of stability to revert back to market before trying to take any trade as far as Bank Nifty is concerned. On daily time frame chart, this week started off on a decent note. Right, we saw a positive candle for the week, and then Tuesday and Wednesday. Tuesday was again a smaller candle, but the close was above the previous close, which continued to kind of give some sense of confidence. But what happened on Wednesday was fairly disappointing. Wednesday, it looked like Bank Nifty is ready to move higher, and possibly, with this kind of contraction forming, it was willing to form a smaller contraction on daily time frame and possibly take out. But then the way we kind of sold off on Wednesday and Thursday is pretty disappointing. Thursday being monthly expiry, volumes kind of spiked significantly as compared to many of the days earlier. So if you see, this is one of the largest volume day, also because of the fact that we were having a half yearly closure, which means index readjustment and stuff like that. We saw a huge volume push down. Uh, then now we are seeing some bit of wide range candle, partial bullish engulfing. You can call this as a bullish engulfing, while the close was not at the highest point of the day. Close at around highest point of the day would have made things much more stronger for Bank Nifty. But any case, it's a decent candle to work with. Again, when we move to daily time frame, you look at the way we are below 50 DMA, clearly lower high, lower low. There's hardly any high that you would see. You are typically seeing a drop, some effort to move up, and then again push down with some sense of candles out here. Though on Friday I was tempted to take a trade on hourly time frame chart. I was looking at hourly time frame chart, and Friday when I got tempted to trade, essentially what I was looking at is this region of small candles with some tail, some element of tail, which also coincides with this area of consolidation. So it looked like there's a probability that we may see some bit of upward move, and I was very tempted to take a trade somewhere here uh, as this candle was printing, but then I decided against it and wanted to wait for the day end candle, and then we saw two good solid candles getting printed, so I decided to let it go rather than trying to jump and take a trade. But if you look at the Bank Nifty structure per se, it looks much better now, though we are below 50 DMA. But very clearly on an hourly time frame chart, this is the range Bank Nifty is trying to kind of build and consolidate. What we should try and do is print a wide range candle, something like this, and it should not happen right tomorrow or day after tomorrow. If it happens something like this, if it happens something like this, then essentially you're talking about a kind of V-shaped movement, which is never considered to be a positive indicator as far as structures are concerned. What you should ideally look for is some consolidation, some range contraction, and then up move rather than a straight up move like this. It would be good if we see a move like this, print another candle like this, then like this, and then you take off. Then you take off. That would be much better, and then you can possibly attempt some trades within this range itself. So I am of the opinion that let Bank Nifty try and take the range out, and then try and see how we can take a trade. At this point of time, I'm not looking at taking any trade in Bank Nifty until I see a consolidation in this kind of wide range candle getting printed. Obviously, if that kind of candle gets printed, your risk reward is not in your favor. Then you'll have to work with some tight pivots to create a stop loss. So broadly, this is what is happening in Nifty and Bank Nifty. Let's quickly look at. So this week was positive for a lot of other indices. If you were to quickly run through other indices on a daily time frame chart, because both Nifty and Bank Nifty are showing red signals, which is they are below 50 DMA. Let's quickly look at what is happening in Nifty and indices outside Nifty and Bank Nifty. We'll start off with things which matter the most at index level at this point of time. So let's look at auto, which has been in a rally, in a sharp rally, and it continues to move higher. It has, so as you have seen, Nifty and Bank Nifty have breached 50 DMA. In case of auto, we have done a test of 50 DMA and bounced right back, which says that the strength is with Nifty Auto in comparison to Nifty or Bank Nifty. I'm just putting a RS chart as well to make things. So let me remove all the drawings. Then let's do a 50-day moving average and RS chart. So you see, we see a clear, beautiful trending RS as far as auto is concerned. Then Let's look at PSU banks. Again, a test of 50 DMA has happened now, whereas Bank Nifty has spent close to 7 8 days below 50 DMA, which shows that this index is stronger than Nifty and Bank Nifty. Energy right at 50 DMA has taken a bounce. Uh, Nifty Metal is not tested 50 DMA in this entire upswing, and with yesterday's flag breakout, I think we have another beautiful rally setting up in Nifty Metals. PSU Bank, we have seen oil and gas is below 50 DMA, again trying similar to Nifty. Small cap far away. Nifty Infra yet to test 50 DMA. IT is one definite structure that I wanted to look at and update. You know, IT after a large correction is consolidating within the zone. So let's look at this consolidation range. It has been consolidating for close to 500 days, 480 days. It's been consolidating within, and it has been there in this region for last 18% range for last 500 days. And the way Nasdaq is moving, it makes a lot of sense to keep a close eye on what will happen to Nifty IT index if IT takes out this with a big up move or a big wide candle even on daily basis. I think it would make a lot of sense to start building positions in Nifty IT. Though I have preempted it last time around itself, I took a entry at this candle. I think I took an entry at this candle as well. So as you can see, I am trying to preempt the breakout rather than taking a trade here. So I have not taken any trade at the lower point. I think I should have taken a trade somewhere here, knowing that we have seen to support here at a couple of times earlier. But I didn't take. I was trying to chase mid and small cap rally, which was playing out. So that's perfectly fine. But now I would definitely want to see what happens to Bank Nifty. But as it takes out this stage one, and moves to stage two, it would be wonderful to start building some really meaningful position in Nifty IT. So Nifty IT is above 50 DMA. Nifty Realty has done a 50-day test of 50-day moving average and moving up. CNX 500 has not seen test of 50 DMA, but look at the structure of CNX 500, Nifty 500. Contraction is playing, and then a breakout of flag structure is playing out on a daily chart. I won't jump too much on this purely because mid and small caps are in a different world. They are doing some amazing things, which is what is driving Bank Nifty. This wide range candle is because it has got support from Nifty 50 as well. So in this week, I think one should be little cautious as to what is happening in the entire broader market. Not jump too much, but structure wise, it seems to be fine. We are in a extended rally. Let's not try and kind of take aggressive positions here. It can be really tough to handle situation from here. Nifty Finance below 50-day moving average, just like Bank Nifty. Mid cap in a different world, mid and small cap different world. CNX consumption test of below 50 DMA, test of 50 DMA is now happening, trying to move above small cap. FMCG clearly below 250-day moving average. Consumer durable is doing exceedingly well. Pharma is above 50 DMA. So if you see, basically it's Bank Nifty which is continuing to exert a lot of pressure on Nifty. Along with Bank Nifty, you have FMCG, which is another good index weight, which has another decent weight on the index, is kind of below 50 DMA. And so are a couple of allied indices. So overall, within large cap space, not much of action happening at this point of time, but seems like we are poised for some bit of showdown uh, either ways. So don't try to read too much into the market at this point of time. I think keeping a close eye on price action will be important, and looking at what is happening in global markets versus domestic markets will hold in good stead. Earlier this week, I had done some study between Nifty Nasdaq indices versus Nifty. So while most of the time we follow what is happening in Nasdaq in terms of performance, right? But there are certain phases where there is a divergence. So Nasdaq can move up and we can go down, which happened couple of years back. Let's look at Nasdaq per se or global markets as to what is happening in global markets. This is the global markets to look at. So let's look at, we'll start with Nasdaq. On weekly charts, Nasdaq has printed a good candle. The downward pressure which was exerted on Nasdaq for last 3-4 weeks is now uh, Nasdaq has taken off from there, and we see that Nasdaq is once again moving towards the higher ground, which is a very good sign, which is positive sign, which will have positive rub-off effect on Indian markets. Let's look at on a daily time frame what is happening. So yeah, on daily time frame as well, Nasdaq had a rejection below 50 DMA, has been below 50 DMA for some time. Now we've taken out the 50 DMA with strength and then trying to build on from there. So I think so we are not out of woods completely. If we get one more wide range candle here is when I think Nasdaq will turn into a beautiful trading opportunity. So we'll not get too much into other indices. So we have seen Nasdaq's. Let's look at SPX, which is broad market index. Rejection at 50 DMA, DMA taken out with solid pressure, and then trying to consolidate here. I think so. These were the levels that we had marked out, and it stabilized. So look at the support. This looks interesting. So support came in couple of weeks back right here. Then rejection happened, and then we printed a long tail, and then now we have printed a fairly long solid candle. So I think this seems to be a area where market is trying to kind of bottom out or show signs of bottoming out, at least of this particular leg of downward pressure. So, and from here, let's see if the market has strength to move up. What we should ideally keep an eye on is how does it behave when if at all, it tries to come back and test 50 DMA once again. But as of now, the upward momentum seems to be fairly decent and strong. So this is what is happening in SPX. Dow Jones, same story, strong rejection at 50 DMA, good push above 50 DMA, testing 50 DMA again. Not so positive candles on daily basis, the last two candles, but overall nothing wrong. Seems to be a good structure, and clearly we are forming a range, right? And some bit of contraction we are seeing. Uh, so while this is a breakout of from the contraction and then again a retest of contraction, but let's not kind of hurry up. This seems to be see, this vertical rally is not great, and hence this consolidation makes a lot more sense and it looks good. But let's see. So overall, I think nothing wrong with markets per se, but the way there is one-sided rally, especially in mid and small caps, one should be really careful at these levels and not try to run away, run too much ahead of the market and try and build long positions. A lot of large positions out here. They should possibly try and keep buying some interesting stocks here and see how it behaves. So that's all for the week. I think we have had a decent week. I hope we build on from here. Thank you so much, and look forward to another great trading week.